At London Financial Studies, we focus exclusively on capital markets. Our programs offer practical learning to professionals from all over the world. Public courses are delivered in London, New York, and Singapore. Our teachers are leading experts in their fields with a wealth of practical knowledge. They are skilled communicators who can get the message across quickly and effectively. Jeremy Hawkins is a highly experienced and widely respected practitioner in economic forecasting. He was previously Chief Economist for Europe at Bank of America and also held senior positions as a strategist in the US Bank. Jeremy's ability to communicate ideas is well known, and his reputation for getting the numbers right is legendary.
Of course, over the last 30 years or so, during which I've been involved in the business, financial markets have evolved hugely. However, as sophisticated and technically advanced as many of the current products are available at the moment, it's still the case that major moves in asset prices tend to be a function of economic fundamentals, be they actual or perceived. I think one of the key issues here is simply the growth, the wealth of the data available at the moment. We've seen an expansion of capital markets coinciding with what is an ongoing globalisation of economies. That means that there's a massive economic data out there now which simply didn't exist before. So it's a case of being able to identify which are the key economic figures which we need to look at, and in particular to put them into the context of what the policymakers themselves are wanting to do. It's one thing to start off with identifying which are the most important economic variables, but even so it doesn't necessarily mean, let's say for example, that a stronger than expected retail sales figures automatically means that the underlying trend in consumer spending is heading upwards. It could be going completely the other direction. So an in-depth knowledge of the data is as important as anything else in terms of trying to fathom out exactly where these financial markets might be headed. It really, I think, comes down to formulating some kind of model. So we can take the latest piece of economic data or indeed an economic event and see how that fits into the overall current economic jigsaw. Does it change that jigsaw? Is it a different picture? And if so, why? And what does that mean then for asset prices?
This LFS course provides an understanding of what economic data mean and how they relate to each other. Case studies help you identify key statistics and indicators most likely to move the markets.
The course has been running for the best part of 10 years now. And although its goals haven't changed, that is to leave clients with a strong idea of how to interpret economic data and the impact upon financial markets, the course is being constantly updated. So it's permanently consistent with the latest trends in financial markets and it's relevant. In terms of the course structure, we kick off day one with looking at where the survey actually come from and highlighting some of the risks associated with the data that financial markets actively trade off. We then move into looking at some of the building blocks for the key macroeconomic numbers, where the likes of GDP comes from, how the CPI is put together, how the employment data are derived. Then we move into one of the crucial parts, I think, of certainly modern day economics, which is looking at the so-called soft data. So the likes of surveys, which have become hugely important in terms of how forecasters now derive their own particular projections for the so-called hard data. Later on the first day, we'll then move into looking at seasonal adjustment of the figures, which have a big impact on how the headline numbers come out. We're also looking at the risks associated with those figures in terms of revisions, which can be quite significant for a number of economic variables. And we'll also look at underlying versus headline. The idea that sometimes you can see an economic figure which might appear good, but in actual fact, once you look at the details behind the headline, it could lead to asset prices going completely opposite direction. And we'll end off the first day with an exercise which allows clients to look at individual figures in relation to what's been expected and to try and determine themselves how financial markets would react to those particular outcomes. Day two then, we'll be looking at what we can get in terms of looking at the future out of what's available now. So we'll take current economic figures and see what's contained within those individual reports to help the forecasters come out with their view of what's going to happen next time round or even over the medium term. Then we start looking at the figures more from a policy perspective. So we'll look at economic numbers and indeed crucially events in the context and perspective of monetary policy and fiscal policy. We've been living now with central banks operating with at or near zero interest rates for such a long time that many people simply aren't used to having interest rates much above zero. That will change, and we've used the course to look at an idea of where financial markets will be concentrating upon, what they're looking at for when that turnaround finally comes about. Later on, we'll consider then how the economics looked in terms of the forecast of the global economy, both perhaps what our own clients think, what I might think, and some of the big international bodies as well. And then we round up with a second exercise, which will be putting economic data into the context of what the policymakers are looking at and seeing how they influence financial markets in terms of interest rates, bond markets, equities, and foreign exchange markets as well. Over the years, we've had a wide range of clients coming onto the course. We've had the likes of junior traders through to corporate treasurers, through to central bankers, and pretty well everything in between. But the nature of the course is such that it's really built for anyone with an interest in economics, someone who is aware of the fundamentals of economics per se, but would like to know more about how the individual figures fit in with each other, what they mean for policies, and ultimately, of course, what changes in those figures will mean for financial markets. So it really provides an opportunity for someone with a basic understanding of economics to develop that understanding into something much more useful, which can be directly applied to how financial markets work. In a nutshell, the course provides the answer to so what? That is the fundamental question that if, for example, US non-farm payrolls come in significantly stronger than expected, or the EU Commission's Economic Sentiment Index falls surprisingly sharply, what does it mean for financial markets? The course will provide help in identifying, understanding and interpreting economic variables and events. And if we can get our head around that, then there's a much better opportunity to maximise profits and certainly the opportunity to limit downside risks.